Good morning. It's noon on Saturday after a historic week last week. The stock market lost 1,000 points, 1,017 to be exact. And I'm sure everybody's wondering what will happen next. Is it a good time to buy? Should one panic and sell? There's a lot of conflicting advice, but keep in mind the consensus throughout my lifetime has been buy the dip. Buy the dip and hold. It's been a strategy that's been rewarded since the 80s. So is that still the case? Will it always be the case? Let's look at some pictures and see if they give us any clues. So the first picture we're looking at here is the Dow Jones. These are daily bars. You can see that it's fallen from about 18,400 in May of this year down to 16,400 now. These are 200. And 2,000 points has evaporated. No one's panicked yet. No one really seems to understand 2,000 points have been lost. Everybody's thinking 500 points on Friday, 1,000 points on the week. But that 1,000 points came after a previous 1,000 points. So let's keep in mind we're looking at something that's starting to have some kind of magnitude. It is already 10%. The market prognosticators are saying 10% is healthy. Well, we'll see. If 10% is healthy, maybe 20% will be healthier still. What do the pictures tell us? So looking at this daily chart, you can see that previously the market found buying support around 16,000. That's an artificial level because a Fed official came out at exactly that point in time and said that if things did not improve, they would do more QE, which is create more money, more debt, and try to jumpstart the economy with more of the same medicine that failed before. But it was very effective. It spooked the market. Anybody who was short got crushed. The market rallied 2,000 points then in about 2 months, from 15.8 to 17.8. And it's been bouncing between 17 and 18 ever since. This is the first time we've broken out of that range this last week. And if you look on the dailies, it certainly seems as if we're going to go down to test the October lows, also henceforth known as the bullet lows. So let's zoom out and look at a bigger perspective and see if it gives us more of a clue. These are the weekly bars. And you can see that the first thing you notice is that this last week's bar was very long. The long bar is usually an indication of a forceful move. I would certainly not expect this to indicate the end of the move. Looking at that weekly bar, you can see it's broken down from its long-term uptrend. It doesn't have very far to go before it starts getting back down into the lows of 2014, as you can see where the cursor is placed. That's 1,000 points away, but at the rate we're moving, with a long bar of this type, all bets are off. I mean, theoretically, looking at this chart, we could retest the 2009 lows. Surely that's the worst case scenario. Well, let's zoom out even further and look at the monthly bars. Keep in mind, this is the same thing. This is the Dow Jones Industrial Average. This is looking at it from different perspectives. Each bar represents a different time period of time. The first one we saw, each bar is a day. The next, each bar is a week. And this last, each bar is a month. Keep in mind, this month is not yet completed. We have a week to go. Looking at this bar, you can see that even the 6,000 low doesn't look that safe. It's lower than the low of the tech crash, the tech bubble crash. So looking at this chart, you can see the tech bubble, the crash, the housing bubble, the crash, the central bank bubble. Where will this crash take us? Well, looking at this monthly chart, I would say we are headed to 14,000. I expect it to be fairly quick. Do we hold there, or do we get back into this 7,000, 14,000 zone where the market spent a decade? If we get down into this zone, there's a lot of people who thought that value was in this region. They will be tempted to act. At some point, people are going to start ignoring the advice of prognosticators and actually panic. But we're nowhere close to that yet. I would expect that the feeling, the mood when the market gets down to 14,000 will be that further losses are assured. Once everybody believes that the market is going down, that is when it will rally, and it will rally hard. So be ready. I think this is a multi-year move that we're in the middle of here. Fortunes will be made and lost. which will be yours. Best of luck.